Good evening, guys. My name is Henry Gamble with SimplerOptions.com, and today's free video I wanted to take a look at GMCR ahead of tomorrow's dividend. So on the dividend, this is always an interesting situation because it's one of the few times where we know this stock will be moving. We can see here on Thinkorswim where it's got this illustrated showing you that the 25-cent dividend is coming out tomorrow. So we know that the stock is going to drop 25 cents to pay that dividend. Well, anytime you have a known move, of course the next question is always, okay, how can I try and make money off that? And that's one of the trickier aspects of options trading because it seems like a very straightforward, obvious thing, but what you want to be aware of is some of these nuances that go in with this. So notice as we've been heading into this dividend throughout here, that implied volatility has continued to climb higher, and you're going to see this a lot. This is why, people think, okay, if I know the stock is going to drop, I'll buy a put option, and I mean, you're getting taken advantage of even more so if you wait until the day just prior to it, because you can see that's where the implied volatility is the highest. So you come in and you pay that high premium for that put option. After it drops the implied volatility, you'll likely see a good chunk of that come out, and it's just a tough way to try to make money trading options. Just remember that first off, there's no free lunch in trading, and two, that if something seems this obvious and straightforward essentially, there's already a market maker that's already thought about it and already taken advantage of it. I do not try and play something like this to the downside inside of that. Now you want to be careful if you've got something in here that's a short call that's in the money, because if those are exercised against you, then you'll end up paying that dividend. So be careful if you've got that. Not buying puts is another key aspect of that chart. And then what do we do with this tomorrow? Well, I've got an out of the money put credit spread and an in the money call. Perfectly happy with those and not making any adjustments. However, tomorrow, if this stock drops like we're expecting it to, the best case scenario would be that it drops that little bit and can continue to hold the tree line here at 124. If that's the case and prices look stable tomorrow, I think you're going to have a lot of opportunity here off of the 4-hour squeeze. We can see that when I'm looking at this chart, notice that it's 10 years worth of daily data, so that I know for the past 10 years, or in this case all time for GMCR, this 128.04 is the high. So after that's paid out, providing the trend holds up, I think you're going to see a nice move off that 4-hour squeeze, and that could push you up into new highs. So essentially, once the dividend's paid out, look for a chance to buy it. Another place that I was going to show the visual aspect of this idea behind GMCR is if you look into the options chain here in Thinkorswim. So right now, all my different series are collapsed. I can't see any of them. If I scroll down towards the bottom, you're going to find this area that's labeled as product depth. Now on the previous chart I showed on the daily where you could see implied volatility continue to rally, but that's on the underlying itself and its implied volatility. If you come down into the product depth, Thinkorswim will actually allow you to nail this down a little bit more, and it's a great example of being able to distinguish the high IV on the calls versus the puts, because of course we know the stock will pull back on the drop. So we look at this, and when you're first pulling this up, you're going to have all series selected, so it'll show you all of the options for GMCR. Uncheck that, and then come back in and just check the July weeklies, because this is where this example will show out the most. So when you look at the two of these, also make sure that in the bottom left-hand corner, you've selected implied volatility as your value, or you will see a different, there's a lot of different variables you can choose from there, but I'm focused on the implied volatility for now. Notice how on the call side, you're sitting there right there around 150%. But when you look at it on the put side, you're up closer to 200. The perfect example of where coming in and buying those put options, you're paying a lot of extrinsic premium for them, and then after that comes out of it, after the dividend, that's usually eroded to the point where you're not really making any money on it. That's why I avoid trying to play those that way. It's a good graphical representation of what's going on there with the calls versus the puts. And after that gets out of the way tomorrow, I think we'll be in good shape for GMCR to make its run to a next new high. So I hope that helps, and we'll see you guys at the next free video.